Hello, and welcome to day 2 of the St. John's Board of Trade Outlook Conference. I'm AnnMarie Boudreau, CEO of the St. John's Board of Trade. Thank you all for joining us today. Today, we're diving into the financial reality of things, examining matters related to our fiscal reality, both here in Newfoundland and Labrador and across the country. Later today, you'll hear from Douglas Porter, Chief Economist and Managing Director of BMO Financial Group, regarding the high-level economic outlook as it relates both to businesses here in our province and across Canada. But first, to start our day, we're going to dive into the provincial budget and the many conversations that have been taking place since Minister Coady presented the budget last week. I'd now like to welcome the Honourable Siobhan Coady as our first speaker today. Minister Coady wears no shortage of hats in our province. She is Deputy Premier, Minister of Finance, President of Treasury Board, Minister responsible for the Public Service Commission, Minister responsible for the Newfoundland and Labrador Liquor Corporation, and member for St. John's West. Thank you, Minister, for being here today. I now invite you to begin.
Thank you very much, AnnMarie, and thank you all of you for joining us today. I think this is a great initiative by the St. John's Board of Trade. Very important conversations and topics that are being discussed. I'm glad to see the Prime Minister and the Premier there yesterday, having an opportunity to speak to you quite frankly and forthrightly, and I'm glad to be here today as well. I'm a past president of the St. John's Board of Trade, having been president 25 plus years ago, believe it or not. I was just a child. And I will say that, back when I think about it, back in the early 1990s, our hair was bigger and our economy was much smaller. The Board of Trade was very active in lobbying for the Outer Ring Road. Stavanger was a community in Norway and not a major shopping district. So a lot has changed in that intervening time, but Newfoundland and Labrador has grown and prospered, and we want to continue to grow it. I think that all of us, if I could see you all today, I know that all of us would agree that we want a strong, smart, self-sustainable, Newfoundland and Labrador. We want to have a very strong province moving forward and continue the growth that we've seen over the intervening years since I've been president of the Board of Trade. One thing I know that I was taught by the Board of Trade is perseverance and tenacity. You can imagine in the 1990s, especially in the early 1990s, things were very challenging in Newfoundland and Labrador with the collapse of the fishery and without the emergence of the oil and gas industry and the growth of that economy. I also checked and I remember lobbying hard to lower taxes in the province. I checked our small business rate at the time was over 5%. So we're certainly making strides towards improving our taxation system as well. I will say that this particular budget really is focused on both transformation and modernization in Newfoundland and Labrador, and continuing to ensure that we have what I want to call strength within our economy, strength within our educational system, strength to emerge from the crisis that we have right now of the pandemic. And as we move from the pandemic, of course, making sure the strength is in our economy. And so that the budget really does focus on the modernization, focuses on the transformation of Newfoundland and Labrador to improve service delivery, to improve the means and mechanisms, the way we deliver services. So the budget does speak to that. And it also speaks to what I'm going to call the prudent and responsible spending that this government is undertaking to ensure that we emerge from the pandemic stronger. And to emerge from, what I'm going to call the economic challenges that come from the pandemic, even in a better way possible. So I'll give you kind of a snapshot of where we are financially, and then move through some of the transformations that we've talked about in the budget, and some of the investments that we've done, and then I'll open the floor for whatever questions you may have. But first, I want to tell you that, coming out of COVID is going to be a welcome, I think, to all of us. We have now put before the people of the province the plan for how we emerge from COVID. As you know, we're hopeful to open up the borders across our country and welcome Canadians to Newfoundland and Labrador as of July 1st. We're well into getting close to that 70% mark of people who have their first vaccinations. I think yesterday we hit 65%. So as more and more people get their first vaccinations, and as you know, we've opened up to allow for the second vaccination. So I'm grateful for that. So let me just talk about last year's budget. As you know, we were full into COVID at the time. Our deficit was $1.84 billion in deficit. Is certainly a tremendous impact. It wasn't the highest deficit Newfoundland and Labrador has ever had, but it certainly was significant and challenging. But we were able to bring that deficit from 1.84 to 1.64 by year end, which was our year end in government is March. So by the end of March of 21, we were at 1.64. This budget calls for a deficit of $826 million. Still very significant. I do not underestimate the impact of that deficit, and we want to continue to lower that. But it is about $1 billion less from last year, so I'm grateful that we were able to really, not only increase our revenues, but focus on our spending. Matter of fact, the Canadian Institute of Health has said that Newfoundland and Labrador has done an incredible job of holding the line on healthcare spending when other jurisdictions have increased by 6 and 7% over time, despite notwithstanding COVID, but aside from COVID, we've been able to hold the line on spending. So that's where where we're really having that strength of holding the line on additional spending. So I will say that we'll be borrowing $1.7 billion. That's to replace some money that is turning over, some past commitments that are turning over. Last year we borrowed $3 billion. We had no challenges to put that money into the marketplace, and we're getting a very good rate for that money. I had a meeting with the banking syndicate yesterday, and they, in a general sense, congratulated us on a strong and fiscally prudent budget, and I was pleased to hear that particular language. I will also say that in the budget in the budget speech in particular, I speak to some of the ways in which we're going to continue to achieve the goals set out in the budget and the controls that we will have in place. So I will talk about, I did talk about in the budget bringing in balanced budget legislation. I know the Board of Trade has, over time, has been talking about that as well. And, the balanced budget legislation, we're not going to get to a balanced budget for a few years, and I'll explain that now in a second. But, I think it's important to show the intent of government is to balance the budget. I think it will be a strong legislation. It will have some parameters in there for things like COVID or any other major disruptions, so that we're not hemmed in too much, but that we do have the ability to be flexible, but that we are focused on balanced budgets moving forward. I think that's critically important. So we'll be bringing that through. I also talked about in the budget speech putting in a means and a mechanism for continuous improvement, program evaluation, and bringing in an accountability framework, not just for the departments within government, but all agencies, boards, and commissions, crown corporations, but also anyone who receives money from the public purse. So we'll put in an accountability framework that'll sit in Treasury Board. And so I'll be having oversight of that and making sure that is the case. I think that continuous improvement is essential. We, as we modernize the government in Newfoundland and Labrador, we want to continue to make sure that we're continuing that program review on an ongoing basis. I did also talk about in the budget speech bringing forward what's called a future fund. Basically, it is a fund that'll help us to pay down our debt, which is critically important, or make investments in the green economy. So if we sell any assets, I'll use that as an example because I do talk about that in the budget. If we do sell any assets, we'll put the returns into the future fund to either pay down debt as it rolls over or to make investments in growing and strengthening our economy. Again, we also have talked about that in the past, about taking some monies from our offshore. And as we move towards balanced budget, we'll be able to take some of that money, putting it into the future fund for future obligations. So I will say that we are moving towards balanced budgets this year. As I said, 826 million in deficit. We're bringing that down prudently and responsibly over the next number of years. Next year it will be at 587, the year after 377, the year after 314, and then down to 88. So by the time you're in the 25-26 range, you're basically at balanced budget. You're at $88 million in deficit. From there, we see growth, and that'll help us then start to really tackle our debt. We have a tremendous debt for hanging over the heads of the people of the province. And as I said in the budget speech, we don't want a child born in the province today to inherit debt. We want them to inherit opportunity. I do want to address one thing that came up coming out of the budget and coming out of the budget speech. Some people noted that we were having more expense this year, or that's what it looked like to them. Our expenditures were higher. Matter of fact, we're at 9.344 billion this year, which is a high expense level for this province. I will say that next year we're at 8.4, which is more normalized, and then reducing somewhat into the future. Let me tell you why that is the case. It is federal flow-through monies. So as you know, the federal government provided the province with $320 million to assist with the oil and gas industry. As you know, that has had a very tumultuous year, and that was monies to assist the oil and gas industry. We also have 100% federal funding for a number of programs, but that's worth about $130 million. We have the COVID contingency fund. I'll talk a little bit about that today. That's worth about $120 million. And then there are things like infrastructure cash flows. All of that adds up to be $682 million. So it's actually more than what you see in that temporary blip of expenses going up. So please rest assured that is not increased expenditures by the provincial government. It is indeed flow through funds by the federal government into the province, and then of course out to programs such as the oil and gas industry. So I wanted to, I guess, allay your concerns in that area. So let me talk a little bit about transformations. We've been talking about how important it is over the next very short period of time to transform and modernize government, to really focus on some big, bold decisions, to improve the way we deliver services, to lower costs, and as I said, modernize government processes. So in the budget, we talk a lot about the transformations that we're undertaking in the next very short while. So allow me to run through them with you, and I'll talk a little bit about them as we move through those. So we're undertaking a big comprehensive analysis and a reorganization of NALCOR. You can appreciate that NALCOR was brought into fruition in 2007, and it was tasked with developing the Lower Churchill project. Muskrat Falls is now 99.99% completed, soon to be completed, and we want to make sure that we streamline, remove any duplications, and to really look towards saving money from NALCOR. As you may have noted this week, Stan Marshall is set to retire, and I certainly appreciate all his hard work. When we came into government back in 2016, the Muskrat Falls project was in turmoil, and working with Stan Marshall, we were certainly able to finish the project much stronger. We have appointed the current president of Newfoundland Hydro as the CEO. I'm very, very pleased to have Jennifer there. I think she'll do a tremendous job of this transformation of Nalcor and removing any duplications, streamlining the service delivery process, and setting us up for the future. We also talked about merging in other Crown corporations. We have over 200 Crown corporations in the province, in a very small province, and we want to ensure that they are brought within government, streamlining again, reimagining how we deliver the service. And we're going to be bringing in agencies and boards like the the Newfoundland and Labrador Centre for Health Information and NL 911 into government, reducing, removing any duplications, reducing and being more efficient, and of course, making sure that we are fully aligned with delivering the best possible services to the people of the province. We've also told all Crown corporations to expect this kind of review. So we're looking at the 200 Crown corporations and saying, is there a better way we can deliver that service? Are there duplications? Can we streamline and move in that direction? We're also taking steps to integrate Newfoundland and Labrador School District. As you would have heard, we're looking at taking it into the Department of Education, removing any duplications, really spending the money less on administration and more on education, I think is the line I used in the budget speech. I think that'll help us again streamline service delivery. So that will be underway as well. We're also taking as you know, we have 4 health authorities in the province right now. And as you know, the health court is looking at the overall delivery of health and how we can improve the overall delivery of health and modernize it. But we noticed, and I think you did as well, we have 4 health boards with 4 back office functions. So that's 4 payrolls, 4 finance, 4 procurement agencies. So we're looking now to integrate all of them into one corporate services delivery mechanism. And that'll help with streamlining and remove any duplication. It'll also help us to get from procurement perspective, for example, instead of having 4 different procurements and 4 different types of items being procured, now we'll be down to procuring 1. We think that'll both streamline operations and save us money. We also announced in the budget that we wanted to improve service delivery and maintain and improve service delivery for things like facilities management, registries, ferries. We're going to go out in short order and ask for solutions, joint solutions to how we can better, an alternate delivery mechanism, so how we can better deliver those services. The goal is to both improve service delivery and also have what I'm going to call a good accountability framework, but also save money for the people of the province as well. Those are what I'm going to call the big, bold initiatives that we're moving forward on, and we wanted to at least to announce the steps forward to doing that. We will be having a transformation secretariat, a group that will be making to action these items in short order, and we want to tell the people of the province that we're moving forward on these things to improve both service delivery, but also to improve. To remove any duplication, to streamline, and to reimagine how government is being delivered in this province. There will be more to come as we move forward. As you know, the Premier's Economic Recovery Team has put forward a very comprehensive report that is now for public consultation and will be guided by your commentary around what the next steps may be. We also have made in this budget announcements around Memorial University. As you know, Memorial University receives both an operating grant from the province as well as a grant of 68.4 million to maintain its tuition freeze, as well as a grant to the medical school, as well as some other funding for Memorial University for equipment and for some capital expenses. That adds up to be about 374, close on $374 million a year. And so if we know that Memorial University is looking to have more autonomy, so we have announced that we will be opening up and considering more autonomy through the Memorial University Act. But they've also indicated that they want to move away from the way that they they have tuition right now. And so therefore we'll be moving away from the grant for that tuition. And so that'll take some time. They're going to take it in a slow and steady process, and they'll be making more announcements of this. And we'll be doing the exact same thing. But we'll also be offering then needs-based grants for students that may be impacted. So we'll be offsetting some of the impacts for those that need it as we move forward. We also, in the budget, did speak about regionalization. This is under municipal affairs, and I think that this is something that I know the Board of Trade has been strong on as well, and I know municipalities Newfoundland and Labrador has also been strong. So I think what you're seeing in the budget is a true sense of the direction that the government of Newfoundland and Labrador is heading. We really want to ensure that we're transforming, and again, I'll use the word modernizing service delivery for the province of Newfoundland and Labrador. Let me tell you about some of the investments, and then I'll pause and open it up for discussion and conversation. So some of the investments that we're making. I'll talk a little bit about the $20 million that we put there for the small business fund as well. As you know, last year, and working with the St. John's Board of Trade, we were able to introduce the Small Business and Community Organization Fund. This is for COVID, so it's $20 million, and again, COVID related. It will be similar to what you've seen in previous years. There will be some improvements to it based on some comments by the St. John's Board of Trade. But it will be delivered in a similar way. So a similar portal, a similar program, some improvements that I know the Board of Trade have been asking for. Any company is eligible, any eligible company can, it's a very easy and simple process. Those that received it last year can again apply again this year. So that'll be up and running in the next couple of weeks, and look for an announcement through the industry, energy and technology website. But I'm sure that there will be an announcement as well. We also put into the budget $30 million, is $30 million for the tourism industry. And this is coming, as you know, tourism and hospitality have been very seriously impacted as well by COVID. And so the Premier's Advisory Council on Tourism have put forward their plans, and part of those plans, we added the funding there for that, the $30 million in funding that it required. We also put in funding for connectivity. As you know, coming through COVID, connectivity is incredibly important to the province. It is important for both healthcare, it's important for education, it's important for business because a lot of it, and it's important for government because a lot of work now is being done through MyGov NL rather than counter service. So we've put additional funding there for connectivity across the province of Newfoundland and Labrador, $5 million this year, $10 million for the next 2 years. That's to ensure improved cellular and broadband across the province, and we know we leverage that money on about a 4-to-1 basis. So it's a tremendous investment in connectivity, but I think it's the right and essential thing to do to modernize our province. We also have, we've also increased the equity fund for television and film. We know that there has been a big growth in that industry, and we want to continue to encourage that growth. And I know it's a pretty exciting year with a couple of TV shows being developed and more in the works. So we've put additional supports there for that. There's money, of course, about $27 million to support economic development initiatives, research and development, commercialization, and investments in our technology sector. As you know, we're also working with Tech NL on their programs. And there is additional money, for example, for additional exploration money for the mining industry. There's $20 million for more geoscience work offshore Newfoundland and Labrador, seismic work offshore Newfoundland and Labrador, and there's close to $600 million on infrastructure projects. So big investments that yield big economic results. So before I pause for a few moments to take some questions, let me tell you what the economic forecast says. So as you know, last year was a very, very, very difficult year for not just the province, not just the country, but in the entire globe. But we are seeing a resurge in our real GDP. We'll see a growth of about 5.6%. That's what's anticipated in 22, so 5.6% in real growth GDP. We also see that household incomes are up, and that's a very, very positive thing by almost 3%. And we're seeing retail sales now. Retail sales last year were up, even despite COVID. Retail sales in the province were up by 1.6%. This year, we're seeing 5.6%. And we're seeing employment up by about 2.6%. So I think the economic indicators are positive coming out of COVID. I think there's rebounding in our economy. I know that mining industry, technology, many other industries are rebounding quite strongly, and I'm looking forward to a very good year for the tourism sector as well, and for the film and development sector. And we also have our renewable sector, that's fisheries and agriculture, really strong as well. So I'll pause there. I think the future for Newfoundland and Labrador is very positive. I think government is taking the steps to modernize, to improve service delivery, to lower costs, to get us back to what I'm going to call sustainable budgets, making sure that we have addressed our deficit and then to address our debt. I also mentioned in the budget, and this is my final comment, that we will be looking at the assets that we own in the province as to whether or not it's the right time to sell those assets to pay down debt. And I'm looking here at our offshore assets, any real estate, even Newfoundland and Labrador Liquor Corporation. Will consider them over the next number of months to see if it's value to the province of Newfoundland and Labrador. We've made a tremendous investment in those assets, and whether it's time to sell those assets or sell partial of those assets so that we can pay down debt. But the future is very bright, I think, for the province. We have, tremendous strength in our small businesses. We have tremendous strength in our various sectors, and I'm looking forward for that strong, smart, self-sufficient Newfoundland and Labrador to continue to grow and prosper. And I'll pause there and turn it over to you, AnnMarie.
Thank you, Minister. That was a very comprehensive overview. So I thank you for that and the detail. And I think, having context around this is helpful for all of us. So having the benefit of this discussion, I thank you for all of that. We certainly had no shortage of questions. So I will start to run through some, and many of these you have certainly hit on. And if there's any of these that you are able to elaborate or provide any more detail, that would be great. I guess I'm going to start with a very general question. Minister Coady, what do you and your government colleagues view as the most significant items that were presented in last week's budget?
That's a very good point. I think the most significant items is the signal that we're modernizing and improving and the efficiencies. I think that we all recognize that we've had some we've had some debt or some long-term deficits. I think I even said out of all the years that we've been in Confederation, we've had continuous, except for about 10 years, deficit. And so I think it's time for us to really address the way we deliver services to reduce the costs, to improve the service delivery mechanisms, to ensure that we address and address in a sustainable way to deliver our services. So I think for the first time that I can recall, and as I said, I've been following budgets since my days at the Board of Trade, for the first time I've seen a real commitment by a government to this transformation. And I think it was important. I think it was very important that we brought forward how we're going to achieve it, and we have the means and the mechanisms, the support surrounding it. So I told you about what we're doing in Treasury Board. Excuse me. What we're doing in Treasury Board with continuous improvement program evaluation accountability framework, and what we're doing with getting on to actioning these items. So I think that was a very strong signal. I think it was a very strong signal as well, and I think kudos to the business community for holding our government's feet to the fire, that we're not increasing overall program spending. So yes, I know the expenses went up, but again, I think I addressed your concerns around that. But the program spending, we didn't give departments, additional revenue, additional stipend from budget. They had to hold their line if they wanted to introduce a program, they want to change a program. They did it within their budget envelopes, no different than what a business would have to do to if they needed to change anything within their budgeting process. So I think from my perspective, it was very important for the people of the province to hear and to understand what government is doing to address this long-term challenge that we have with deficits. And I think you've seen that. We're starting to modernize and improve service delivery, reduce any duplications, and ensure we're very efficient in what we're doing. And so I thought that was probably one of the most important things you saw in budget, and that maintaining control over the expenditure.
Okay.
And getting, I should have one final thought, and that is, the plan that we have to get to zero. So it's plausible, it is prudent, it is responsible, and I can tell you that. We have had some feedback by some of the bond rating agencies, certainly from the banking syndicate as well, and they've been supportive of what we're trying to achieve and how we're trying to achieve it.
It's a very good signal. You touched on this, but great segue. So I'm sure, like you have, like many of us, we've been hearing a variety of comments from a number of stakeholders since budget day last week, claiming that there simply wasn't enough detail for how you're going to achieve these things that you just referenced. What do you say to Newfoundlanders and Labradorians who feel that the budget did not outline enough of a plan?
I think the budget did outline. The speech was an hour, so it's you can't. I could have probably spoken for longer, but I don't know how the level of detail certainly are announceables that come after the budget speech. There were things in the budget, I think, that were very significant. We have, as I've said, set up the continuous improvement. We have signals from most of the banking syndicate and from a lot of the bond rating agencies that they're very pleased to see the direction. Again, as I said, that direction was signaled, and the strength of that signaling, I think, was there. As with any program within a budget speech, there's only so much detail that you can provide within the context of a budget speech. It'll be rolling out over time. I think the Small Business Assistance Program was only a couple of lines, and as you know, the more details come out after the announcement that it is available. So I think people can rest assured there will be a lot of discourse and discussion over the next while about some of the movement towards some of the transformations, and the transformations will come, and the impacts to budgets will come over the next number of years. But we are starting right away to action what we have said, and that's what we wanted people, the province, to understand, that we are actioning these items and these transformations, that we're moving forward on the modernization, that we were providing as much detail as we could in that form. More details will come out, obviously, as we move forward. For example, with Nalcor, we indicated that we were doing the analysis and moving towards streamlining and removing duplication. And within the next couple of days after that, we said who the new CEO, the acting CEO, would be as we move through this. And I think that's it was a big signal as well. So I think people of the province can rest assured they'll hear more of this. But I wanted to make sure that people understood that that's the direction that this government is taking, and that we are actioning these items right away, and we'll be moving toward that.
Okay, I'm going to jump ahead a little bit because I think you've set me up very well. There were a number of initiatives, and those transformation initiatives that you just referenced, and there was a lot of, there was language that you used last week around, amalgamating services. You referenced, integrating the Newfoundland and Labrador English School District into the Department of Education, improving service delivery through joint solutions, the, moving Newfoundland and Labrador Centre for Health Information and NL 911, as you just referenced. Is there anything that you can share about some of those timelines specifically? I know you're saying quick action. Is there any further detail, or is it underway?
Well, certainly, as I've said, we're moving forward with the plans around that. I mean, the health, let me start. The health Department of Health is already in discussions with health authorities of moving the back end service to integrating those service deliveries. So they're already working towards that. Same with NL 911. Same with Milchi, making some of those making those overtures now to start the process of doing that. School board, same. As you would have heard, the school board, the president of the school board, talk about now talking to the department about integration. It that's going to take more discussions of how do we bring it in, what's the type of services that we deliver here internal to government versus what the school board will do. So action has already begun on these things. And so, and there is, as I said, a transformation secretariat being put in place to oversee it and to report to not only, to cabinet and to the premier and to Treasury board, how we're moving through on those things. So action has already begun as we debate the budget speech.
Okay, thank you for that. Minister Coady, you did reference the Small Business Assistance Fund that you once again opened, and we were delighted, and our members were certainly delighted to see that again. So thank you for that. You did just share in your remarks that if you were eligible the last time, it does not prevent you from being eligible this time, which
Right.
will also be certainly very much appreciated. Is there anything, is it just the next few weeks, or is there any more on timing? I'm certainly getting calls.
I bet. So as I said, I spoke with the department today. They are already in the process. There were some adjustments. I think AnnMarie, the Board of Trade, had made some suggested refinements to the way we rolled out the program last year. I know that the department is already in contact to get the portal reopened. So I would say it's within the next number of weeks, in a very short time frame. And you are correct that those that received the support last year could also apply for this year. Okay, so I would anticipate imminently within the next couple of weeks.
That will be very welcomed news. Thank you. Again, you referenced this in your remarks a few moments ago, but as I'm sure you can appreciate, and we had many questions about this, it is very difficult to talk about our financial future and certainly, the recent budget without mentioning Dame Moya Green and team's recent report, The Big Reset. What can you share with us about your reaction and thoughts on that report? Understanding that government has consultations underway, but is there anything you can share?
Well, certainly, I think I thought it was very comprehensive. I certainly appreciated the volunteers and the depth of knowledge that they brought to their roles and their commitment to the province. I think that they gave us a wide array of opportunities and things that we could consider. So I think that was very, very important. And you did see some, some crossover with the transformations, because of course they've been long-standing suggestions and thoughts of stakeholders and the community as to things that we can move forward on. I will say that we do have the portal open, accepting your commentary and feedback. Please do that. I encourage you to do that. There will be stakeholder consultations. Obviously, they'll have to be virtual until we're COVID-free, but we will be doing consultations to really garner your direction and your support and your consideration as to what will be the predominant direction that you think is valuable for the province of Newfoundland and Labrador. But I will say that what I was particularly struck with is the array of opportunities that they considered to how we can address our financial concerns. So I was very pleased to see that. The depth of information that they were able to bring forward, I think was helpful to the people of the province, and we'll certainly be looking at where the future takes us with that report, and with how we might be able to improve and modernize not just government but the entire province of Newfoundland and Labrador.
Absolutely, and we certainly, as the Board of Trade, we're encouraging everyone to have their voice heard on that and participate in that consultation.
I think we'd be remiss if we didn't thank the volunteers. I mean, there was, a lot of very important community leaders in Newfoundland and Labrador gave a lot of their time, and I certainly appreciate Dame Maury Green's leadership on this, and everyone for their work and commitment, and the ideas they brought forward, I think, were particularly helpful. I think it speaks volumes for Newfoundland and Labrador that we have the depth of knowledge and experience to solve our problems and solve our situation, and that we are tenacious, dedicated, hardworking Newfoundlanders and Labradorians. We'll get through this. We'll get it done.
I think certainly the Board of Trade and our members, many of our members would certainly believe that, and I think are keen to get going. What would you tell Newfoundlanders and Labradorians, especially when you think of business owners and entrepreneurs and members of the St. John's Board of Trade, about why they should have confidence in the future of our province and continue to invest in their business and in their future here in Newfoundland and Labrador?
AnnMarie, I couldn't be more optimistic about our future. Newfoundland and Labrador has weathered some challenges. There's no doubt about that. We've come through some difficult and lean financial times. But when I look at the strength of our resources, when I look at the strength of our business community, when I look at the opportunities that abound, everything from our hydroelectricity that could be turned into hydrogen. Our technology sector is really booming in terms of what it's capable of, not just in ocean technology, but in a broader, artificial intelligence and some of the things that have been happening. And I know that the people on this Zoom call today are fully cognizant of the types of companies that we have in Newfoundland and Labrador that are doing some incredible global work here. We have strengthened our tourism sector. We have a product, I think, in Newfoundland and Labrador that all of North America and Europe are looking for. So, getting out there and welcoming the world, I think, will grow our, especially coming out of COVID, will grow our tourism sector. Mining, we have a gold rush going on in central Newfoundland. For anyone who's not aware, there's a real gold rush going on in central Newfoundland and Labrador. We had last year some of the highest levels of investment in exploration. We're expecting that to continue. We have rare earth minerals, we have cobalt, we have many of the minerals that are required for the greening of the economy. So, the mining sector, and look, iron ore is the, at the highest peaks of price, and we have the We have some of the best iron ore in the world. So I think that for anyone in Newfoundland and Labrador, all we have to do is look around us, not just at the opportunities that we have with, in our natural resources, but also in our people. I mean, technology development is incredible. Our film industry, and the fact that we have 2 television programs being, developed in Newfoundland and Labrador with more to come. I think that speaks volumes. So I think the future is very, very bright. We have strength in our business sector. We have very strong and tenacious entrepreneurs. We have the natural resources that we need here. Our oil and gas sector as well. We have 63 billion barrels of oil. 63 billion barrels of oil in 10% of our offshore. That is, that's available for development. Now that was, that's seen, there has been an independent assessment of our seismic to tell us that there's 63 billion barrels and not discovered yet, but it's certainly there to be discovered, and some of the lowest carbon oil in the world. So I think when Newfoundlanders and Labradorians consider all those things, I think they have a very bright future for Newfoundland and Labrador. And we're making the investments and the commitment to grow our population, as you saw in this budget, significant amount of money to in population growth, and we've put that as one of our key priority areas, and put the money towards developing and encouraging that population growth, and put a goal of welcoming 5,100 new Newfoundlanders and Labradorians to the province, and also attracting those that may have moved away, attracting back. Lots of people can work from home now, where they, pre-COVID probably couldn't.
So that's actually a great segue. That was in fact my next question around the money for investment attraction, the 8.5 million that was allocated, and then the 2 million for prospective residents. Are there any further details, or kind of any of the tactical action of that you can share with us related to those investments?
I think the 8.5 million in the Department of Industry, Energy and Technology, a large portion of that is for the venture capital program, and that's a very important program. And then of course attracting businesses and companies and opportunity to Newfoundland and Labrador. That investment attracted is important to the province. And we have, I think you wanted to, you were asking about the marketing, the $2 million to attract prospective residents. Is that your second part? Right. Yeah. So that is monies in the department for marketing and promotion. We have to, we're competing with the rest of the world for a lot of these talented individuals, and we wanted to make sure that we had the monies available to attract people to Newfoundland and Labrador. We also put money towards, for example, a new portal for attracting people to the province. It's important to have the right information and the right streamlined processes, so people can start to consider Newfoundland and Labrador as our new home. So there are investments there, but I think they're the right investments to ensure growth and stability for Newfoundland and Labrador.
Yes, we would certainly agree with that. We certainly need more people, and with people, come opportunity and investment. Can you speak to any of the specific opportunities that you feel will result from the budget presented last week for private businesses within our province?
Certainly. Well, we will be going out shortly asking for solutions for our ferries, solutions for how we deliver the registries, solutions for facilities management of all the real estate that the government is responsible for. So those, I think, the business community will certainly want to consider. There will be others who will want to consider those as well. Social enterprises, co-ops, maybe the unions might want to be involved as well. But we'll be going out and asking for solutions for how we better deliver those services. There is also an opportunity, I think, under any of the economic development and economic opportunities, everything from agriculture to investments in technology to investments to venture capital opportunities. There are a tremendous number of opportunities from an economic development perspective as well. So I think what you're seeing is government saying that there's opportunity, to deliver services for Newfoundland and Labrador.
And will that likely be, I know you're saying you will be going out soon, will we likely see some of those before the end of this year, before 2021, you think, or?
Oh, will we be out, do you mean asking for those solutions?
Yeah.
Yes.
Okay.
I'm hoping within the next few months.
Okay.
Budget, we're in a budgetary process right now, but I'm hoping, within months after that.
Wonderful. Okay. Thank you. You touched on this. Our economy is, of course, directly and significantly linked to the oil and gas industry. We've seen firsthand how projects such as Hebron and Hibernia have helped our province and what they've meant to our finances. Many are encouraged, certainly, by the recent Beta Nord announcement, and many are equally as troubled by the looming Terra Nova decision. What can you share about Newfoundland and Labrador's oil and gas future to instill confidence?
Well, I think what I've just mentioned is the fact that we have tremendous amount of undiscovered oil offshore, 63 billion barrels in less than 10% of our offshore. We've seen a commitment by CNOC, for example, new entrants. Certainly in my time as Minister of Natural Resources, we had a number, I think it was upwards to 8 new entrants, CNOC being one of them, BP, BHP, all of them coming because of the opportunity offshore Newfoundland and Labrador. We've streamlined with the federal government after much work. We were able to streamline the exploration process, so it doesn't take 3 years to get permits now. It takes you 90 days to get a permit to do exploration offshore Newfoundland and Labrador. We have to continue to ensure that we streamline processes while maintaining high standards. But there are jurisdictions around the world that have been able to do that, so Newfoundland and Labrador will as well. So I think for our oil and gas industry, you're seeing the price rebound. The opportunity is there, and I think you're seeing the provincial government, and as well as the federal government, because they've stepped up with $320 million to support and assist growth in our offshore oil and gas industry. So we're starting to see, I think, some good movement. I was very pleased to see Equinor's discoveries upwards to 1 billion barrels in their particular area. I'm hoping that they'll move forward expeditiously on developing Beta Nord, and I'm hopeful that CNOC makes a big discovery, and that we continue to grow both the Hibernia as well as the Hebron fields, and work for the asset life extension moves forward, as well as for the work that's happening in Argentia. Now that the price of oil is rebounding, now that we're seeing some strength coming back in consumption globally, I'm very hopeful for our offshore oil and gas industry. I think the biggest thing for us all to remember is that one of the biggest drivers now is towards is around climate change, reducing the carbon per barrel. And for Newfoundland and Labrador, we have some of the lowest carbon per barrel projects in the world. And I think that you're seeing some of the oil and gas companies recognizing that and wanting to have a footprint here, because of course they know that they have to lower their carbon per barrel and make some changes as well. So I'm hopeful that we'll continue to make discoveries in Newfoundland and Labrador and continue to grow projects.
I appreciate your insight on that and your optimism. I hope we all see it come to fruition. Minister, it is the opinion, and you've heard us say this again, and you probably were part of this message not too long ago, but it is certainly the opinion of the St. John's Board of Trade that we must all be part of the solution, and that we need to work together to fix the financial situation that we find ourselves in. We all must come to the table with solutions and with ideas. What would you like to ask of the business community that contributes to the future and success of Newfoundland and Labrador?
Thank you, AnnMarie. That's very important. And not too long ago, I sat at the board tables of the Board of Trade and the Canadian Chamber of Commerce, and I know how important it is to continue to press government and hold government's feet to the fire to ensure actions occur. So I guess I'm asking for your patience. I'm asking for your perseverance. I'm asking for your continued strength of the message that we do have to address. We must, in order for Newfoundland and Labrador to have the strength and the opportunities in the future, we have to address our deficit challenges. We are borrowing against our children and our children's children, and that's not fair to them. A child born today is born into debt, and that is not fair. So I appreciate the Board of Trades and business communities' strength in keeping that message forward. And I would like to encourage you to continue to bring forward ideas on how you think we can either modernize, improve, or deliver services. Deliver services, that's always important in a more cost-effective manner. I want you to continue to hold, as I said, our feet to the fire and making sure that we are advancing that and making sure that we are advancing the transformation and modernization of government in Newfoundland and Labrador. It is for our future, and it is for the strength and stability of Newfoundland and Labrador into the future. So I encourage you to continue to do, to give us the sage advice that you would give to the people of the province, and to hold us to account for that.
Well, I appreciate that invitation, and myself and my colleagues will take you up on that without a doubt. We have a lot of members, Minister, who were wondering about this question as it relates to future and what to expect. As we emerge from COVID, there are many businesses, of course, actively making investment decisions, and they need to have an understanding and confidence around future expenses and be confident in the decisions they're making. Are there any reassurances that you can give them with respect to consumption and corporate taxes?
Well, we did. I think it was an important signal that we were able to maintain our levels of taxation. As I think I started with when I was president of the Board of Trade. I remember, I think corporate tax was at 5%, is now at 3%. I think that you are seeing that. We are working on it. We have a plan in place to bring us, get to eliminate our deficit within 5 years. We're being really prudent and responsible in how we're bringing that forward. I don't want to make a commitment that I cannot or may not be able to live up to, but I will say this: you've seen in this budget a commitment to transformation and to addressing some of the concerns that we all have had on how we modernize and transform government, how we become more efficient, how we offer the services that we need in a different manner. I think you've seen a commitment in this budget to transformation, and not just increasing taxes, right? So the taxes that we've had to change, the personal income tax changes that we did do, affecting those who earn $136,000 a year and above, is really more about making sure that we are on par with Atlantic Canada, making sure that we are what I'm going to call competitive in Atlantic Canada. We had some of the lowest taxation levels in that area, so we moved them up. I think we're still pretty much the lowest in those categories. So moving them up, it was more about making sure that we continue to look at our taxation levels and remain competitive. So I don't want to make a commitment at this point in time, but I think you've seen in this budget a commitment to making some of the transformations and not just making a tax change expediently to address our concerns, but to really make the transformations and modernizations to both improve service and to make sure we have a level of taxation that is competitive.
Thank you. That is encouraging. My last question, I believe you did reference through your remarks. We were wondering how bond rating agencies and lenders were reacting to your budget. Well,
as I said yesterday, I met with some of the syndicate, and I wrote down the words strong and prudent, a strong and fiscally responsible budget. So I like that. So let me give you a quick rundown. I have them right in front of me. One of the bond rating agencies said Newfoundland's deficit is projected to fall sharply and steadily, supported by a recovery in provincial owned source revenues, including higher commodity prices and increased federal transfers, while program spending will be held relatively flat over the medium term. When combined with an improved outlook for nominal GDP, this points to a decline in debt to GDP, much improved from expectations at the time of their last review. So I'm hoping that they may take that into consideration. RBC says the path to balance laid out in Budget 21, coupled with a commitment to streamline expenses and adjust tax rates for higher income earners, signals that the government is serious about taking definitive action now. This budget is the first chapter of a huge task that will require not only resolve, but courage. BMO says that Newfoundland and Labrador no longer has the highest debt ratio or the largest budget deficit relative to the size of its economy. TD, in what likely will be well received by investors and rating agencies, Budget 21 commits to significantly improving Newfoundland and Labrador's fiscal position in coming years. So overall, I think supportive, very strong, and hopefully that'll translate into lower costs for borrowing as we move forward. One thing I didn't mention, but I should, is we are really, as you know, the cost of borrowing for the province of Newfoundland and Labrador has been one of our largest expenditures. So we've been making some significant changes in our borrowing program, bringing down our cost of borrowing. And we will be looking at the Financial Administration Act, opening it up and having consideration for how we modernize, if I can use that term again, how we modernize the way we were borrowing and the way we were doing treasury management. So we're not leaving anything on the table. We're doing everything that we possibly can to ensure that we hit the targets that we have set.
I appreciate you sharing that with us. So that brings us to the end of our conversation. Minister Coady, I want to thank you for not only your time today, but certainly your candor and being so forthcoming with us. We certainly look forward to working with you in the weeks and months ahead, and we'll continue working with our members, informing our members, and certainly being available to consult on how we can be working together and how the business community can play a role as we work towards recovery. So thank you for
the opportunity. Thank you for the opportunity to be here today. I will be going in the House of Assembly in a few short minutes to answer more questions about the budget, and I look forward to the continued debate on budget. But most importantly, I think, is getting on to the actions that I described today and making sure that we do have the strong, bright future that Newfoundland and Labrador should have based on the opportunities that we all see around us.
Absolutely. Well, I appreciate your optimism. We're going to take a quick break now, give everyone a little break from their screens, go grab a coffee, stretch their legs. We're going to take a little, we're going to play a little short message from our title sponsor, Fortis, on our return, and then we're going to hear from Douglas from BMO. So thank you all. Take 5 minutes. Thank you, Minister. Well, welcome back. Thank you, Fortis, for sharing that message with us. Fortis is certainly one of Newfoundland and Labrador's business legacies. Fortis has actually been a member of the St. John's Board of Trade since 1987. So thank you for your continued commitment and support. Our next session is all about economic and financial outlook for Newfoundland and Labrador, as well as the rest of the country, presented by Douglas Porter, Chief Economist and Managing Director for BMO Financial Group. I'm excited to hear his analysis and forecast of the global economy that can help inform decision-making as we recover from COVID and certainly enter the next year or so. A little bit about Doug before he begins. Douglas Porter has over 30 years of experience in analyzing global economies and financial markets. As chief economist at BMO Financial Group, he oversees the macroeconomic and financial market forecast and co-authors the firm's weekly flagship publication, Focus. Mr. Porter manages the team that has won numerous awards, including Best Forecaster for Canada by Focus Economics, Top Canadian Forecaster by Bloomberg, and the prestigious Lawrence Klein Award for Forecast Accuracy of the U.S. economy. As a respected commenter on economic and financial trends, he's regularly quoted in national press and often interviewed on TV and radio. Before joining BMO, Mr. Porter held the positions of economist and country risk analyst with other Canadian financial institutions and began his career at the Bank of Canada. He is a member of the C.D. Howe's Monetary Policy Council since 2008 and serves the investment management committees of the Bank of Montreal's Canada Pension Plan and Western's Endowment Fund. He also sits on the board of directors of Toronto Finance International and on the American Bankers Association's Economic Advisory Committee. Today, Mr. Porter joins us from his home office, where he tells me he has been firmly planted since last March in Oakville, Ontario. Thank you for joining us, Doug, and you feel free to dive right in.
Okay, thank you very much, AnnMarie, and good afternoon, everyone. It's a pleasure joining you today. I'd much rather be in St. John's with you today rather than Oakville. I understand it's quite warm there today in St. John's. We've actually been above 30 degrees the last couple of days here in just outside of Toronto as well. So I'm not going to talk about the weather today. I'm going to talk about where we see the global Canadian and Newfoundland economies going over the next 18 months or so, and then I'm going to turn around and suggest what that might mean for a number of financial market variables. I'll talk a little bit about the equity market, but more about commodity prices, interest rates, the exchange rate, and what all this means for the inflation outlook and the Canadian dollar as well. And hopefully do all that in just a little bit more than half an hour. Now, I would like to share my screen at this point because I'm going to walk through a number of slides to basically help me through with this presentation. So I do have to start with everyone's least favorite topic, and that's where we stand right now in COVID. There's certainly been some good news right around most of the Western world in recent weeks here too in Canada. It does look pretty clearly that we've put the third wave into the rearview mirror. The number of new cases has come down pretty much right across the country. Manitoba is really the only province that is still seeing a very high number of new cases, but even in Manitoba, the numbers have come down. This chart is on a per capita basis. It's the number of new cases. It's an average over 7 days per million people, and you can see it's pretty consistent right across the big European countries, the U.S. and Canada. Of course, we've all seen what's going on in the U.S., how essentially they've thrown the doors open, and you can see though the numbers in the U.S. are actually lower, slightly lower than Canada. So whatever they're doing, it doesn't seem to be driving up their case numbers, and I would say that's overall good news. And of course, this happens at a time when the number of vaccines continues to roll out, and especially here in Canada, this chart has really changed in the last couple months or so. We've gone from being a relative laggard in terms of the number of people who are getting vaccines to now being a world leader, at least in terms of first shots. We're right up there, rivaling the highest dosages of any country in the world. Now, of course, we've chosen a very deliberate pattern. Our path, I should say, to give people one shot rather than concentrating on full vaccination. And so we're lagging in terms of the share of the population who has been fully vaccinated. But we believe that is now going to change very markedly over the next month or so. And we think that if you look at that darker bar, that darker green bar on the left, we expect that to move to the right very, very rapidly over the next couple of months or so. So effectively, we think that Canada will easily hit its goals of having over or roughly 75% of the population with the first shot and 25% with at least 2 shots by this summer. We think that is entirely doable, and we think it does set up the situation of a more broader reopening in the months ahead and a comeback in the economy. Now, I will say that for all intents and purposes, obviously the pandemic is not through with us. But financial markets are through with the pandemic. They have long since moved on. Financial markets right across the board are looking at where the global economy, where the North American economy is going to be 12, 18, 24 months down the line. They are looking way beyond COVID. And that's really been the case for a few months now. It's not just the equity market. Of course, the equity market has famously hit all kinds of record highs just last week. Of course, the TSX got above 20,000 for the first time ever. Most equity markets, or a majority of equity markets, are close to or at all-time highs now, and it's been pretty much a one-way trip north. From the lows that we hit in March 2020, almost without interruption. Just a few pauses along the road to this phenomenally strong comeback by the equity markets. But again, it's not just the equity market. Basically, every single financial market out there, or almost every single financial market out there, is signaling a very robust global recovery. If we look, for instance, at the corporate bond market, what corporations pay to borrow versus governments, it spiked. We saw a spasm last March and April. That spike has completely worn off. Those corporate bond spreads are actually now lower than they were before the pandemic began. Somewhat similar story in commodity prices. After spiking lower during the turmoil in the spring of 2020, commodity prices have come roaring back. And now we're in a situation where the Bank of Canada's broad commodity price index is not only at an all-time high, for the non-energy component, it's at an all-time high, but it's also up by about 50% from where it was before the pandemic began. An amazing run by commodity prices at this point. And, I think the key to point out here is just how broadly based the strength in commodity prices is. All the major components of the Bank of Canada's commodity price index, it includes the fishing, agriculture, metals and minerals, and of course, forest products. All 4 of those sectors are very, very strong. The big McGill, though, is the energy sector. It accounts for about half of the weight of the overall commodity price index. Of course, it's made a very nice comeback as well. It's not at an all-time high, unlike a lot of its other counterparts, but it too has contributed very heavily to this broad-based comeback in commodity prices. Now, so what does this all mean for the global economy? Starting out from a very big picture view. So after one of the biggest declines that we've seen in the post-war era in 2020, the Minister Coady, did reference how this affected absolutely every economy in the world. Every economy in the world went through some form of recession last year. But the good news is almost every economy in the world is bouncing back to some degree in 2021. Now, in some cases, that snapback will be pushed out into 2022. It really depends on 2 things. First of all, how's the vaccination progressing in your country? And the second big factor is how reliant are you on tourism? So the economies that are more reliant on tourism and have had a slower vaccine rollout, they'll see more of the rebound in 2022. Whereas countries that aren't so reliant on tourism and have had a much faster vaccine rollout will get more of that growth lift this year. And we think that Canada, the US, China, and the UK fall more into that latter camp, where we're really seeing quite a rebound either now or in the next quarter. And so quite a snapback in all of those economies in 2021, and those we see as the growth leader. Now, you might be somewhat surprised to see India at the top of the deck on this chart with, we're looking at roughly 10% growth in the Indian economy, given the horrific scenes we've witnessed on the COVID front in that country. But I'll point out that India went through a terrible downdraft last year, and so some of this is just rebounding from those very tough conditions that they lived through in 2020. We're still relatively comfortable with that 10% growth rate in India. But from a very big picture, the main point here is after the deepest drop in the post-war era last year for the global economy, we see quite a large rebound this year, and then some of that strength spilling over into 2022. If you look at that little table in the bottom right, just to put some of those numbers into perspective for the global economy, a typical year for the global economy would be growth of about 3%. So about what we saw in 2019. So that gives you a sense of just how wild these numbers have been from a historical context, both last year and this year. And again, so we're looking at well above average growth this year and staying there in 2022. So that's the very big picture. That's the 30,000-foot look. Let's now bring it down to ground level. What do we see for the North American economy? And largely speaking, Canada is mostly tracking the US. This is in the current quarters where the differences earlier this year in the vaccination pace really do make a difference. In the spring quarter, clearly we've all seen it. The US is wide open. If you've watched any of the hockey out of the US or the Indy 500, where they had over 100,000 people, things that we can only dream about here in Canada at this point. The US has obviously opened up a lot earlier than Canada, and it means they are going to get a little bit of a head start. They are going to see strong growth through the spring, whereas we stalled out because of third wave restrictions. We do see Canada playing catch up through the rest of this year and into 2022. We think that Canada will, at the end of the day, post almost 6% growth this year after declining by a bit more than 5% last year. And then some of that strength will carry over into 2022 when we're more fully reopened. Say, for instance, some of the tourism sector, entertainment, hospitality industries can more fully recover through 2022. We do see a partial recovery in those sectors in the second half of this year, but we think that next year will more fully capture a more complete reopening, whereas some of that strength is front-loaded in the US and even into the current quarter. Just to put some of these numbers into perspective, a typical year for the North American economy would be growth of pretty close to what we saw in 2019. So in other words, around 2% would be a normal year. Last year was the single deepest drop that we've seen in the post-war era for both the Canadian and the US economy. But we're seeing quite a rebound in both economies. That 7% growth rate we see in the US would be the best year for the US economy since 1984. And there actually are a lot of parallels with 1984. 1984, the US was coming out of that a terrible recession in the early 1980s, and it was juiced by fiscal stimulus. It was the Reagan boom. The fiscal stimulus looked a little bit different back then. It was defense spending and tax cuts. This time it's basically spending and transfers to people. But the net result we think is pretty similar. And we're looking at, as I said, the best year since '84 for the U.S. economy, and some of that carrying over into next year. Somewhat similar story in Canada, as I said. We're getting a bit of more of a delayed reaction just because of the third wave restrictions that we had in much of the country through the spring. But still, 6% growth would actually be the best year for the Canadian economy since 1973. We didn't have quite the boom that the U.S. did back in the mid '80s, and so that too for us would be one of the best years in many, many decades. And as I said, we see some of that strength carrying over into 2022. Oh, just before I get to the labor market, I should say, so what does this mean on a regional basis? We're really not that far apart from what the minister was talking about earlier for the regional economy. We've got Newfoundland growing by roughly 5% in 2021, and then another year of solid growth again in 2022. We're just a little bit more cautious than the minister would be, not significantly so, but just a tad more cautious, just because we think some of the full recovery in the hospitality industry will actually be reflected more in the next year's numbers rather than this year. We certainly don't debate the view that there is a big recovery coming. We just think it might be a little bit more delayed than what the minister indicated. But we're really not that significantly different in terms of what we see for the regional economy over the next year. Now, turning to the job market, we just got the latest numbers for the month of May, just last Friday, for both Canada and the U.S. No real surprise on the Canadian front, mostly because we had renewed restrictions in Nova Scotia in particular, also in Ontario. Those were the two main areas of weakness in the month of May. It led to another decline in overall employment and others small backup in the jobless rate to 8.2%. We do see that unemployment rate starting to come down and come down pretty quickly in the next 6 months as things do reopen. However, before getting all the way back to pre-pandemic levels, and you can see on the table on the right where we were before the pandemic began in terms of jobless rates, we do think we need a more complete recovery, especially in the hospitality sector and the travel and the tourism sector. It's going to take some time to get those sectors completely back to full health. Whether it's hesitancy in terms of workers returning, which we're seeing in spades in the US, by the way, or whether it's the sector being able to completely get back on its feet again, we don't see the job market getting back to complete health until about the middle part of 2022 or so, or perhaps even a little bit later than that. However, we do think the unemployment rate will come down pretty aggressively through the second half of the year. And you can see we're miles and miles away from where we were last spring, where the unemployment rates in the early stages of the lockdown shot well above double digits right across North America through the worst of it last spring. Somewhat different story in the US. Their unemployment rate does continue to drift down as I said, their economy is reopening faster than ours. They've got a different issue though in the US. Businesses are just struggling to find workers. A recent survey of small businesses in the U.S. Found a record share of small businesses are now struggling to fill vacant jobs. There's actually just a report out this morning that suggested that in the month of April there were over 9 million vacant jobs in the U.S. right now. That's more than there are people that are officially recorded as unemployed. So we've really got a mismatch between these openings that small businesses in particular have and the number of available workers who, for whatever reason, are just reluctant to come back to the workforce. Many have pointed to the extra unemployment insurance payments in the U.S. They get an extra $300 a week above and beyond normal at this point. Some have pointed to just concerns on the health side, or whether it's childcare difficulties. For whatever reason, workers are very, very reluctant to come back to the U.S. We think that will fade over the next year, but it's another reason to be a little bit cautious on the job market. And I think we're going to face some of the same issues, perhaps not to the same degree, but we're going to face some of the same issues here in Canada as well when we more fully reopen. I will point out that according to the official statistics, if we drill down to St. John's particularly, if you look at that chart on that table on the right, I should say, you can see that officially St. John's has actually now got a lower unemployment rate than it did before the pandemic began. And that's one of the few cities in the country that's reporting such a happy place to be at this point. For Canada as a whole, the unemployment rate is about 2.5 percentage points above where it was before the pandemic began. So St. John's is certainly an outlier on that front. Now, even though the job market is, a long way from being back to full health nationally, one thing that's really unusual about the cycle, and there's a lot of things that are really, not to put too technical a term on it, but that are really weird about this cycle, is just how well household incomes have held up. Now, the minister referenced this point. I just want to drum home like how unusual this cycle is, that last year, Canadian disposable incomes rose by 10%. That's the strongest annual increase we've seen in disposable incomes in about 40 years last year. That's during a recession. Normally during a recession, you see a decline in personal disposable income. People work fewer hours, or they lose their jobs, or their wages get cut back. Small businesses earn less money. It's very normal in a recession to have disposable incomes weaken. That didn't happen last year. No mystery what's going on here. This is completely due to government support programs that support, more than made up for the loss of jobs and the loss of hours that we saw. And so households were very, very well supported through the recession. And even to this day, they're still being very well supported by government programs. And this strength in disposable income happened at a time when people were constrained in what they could buy. Here in Toronto, I couldn't go to a Leaf game, even if I wanted to, even if I could. People couldn't really travel. They couldn't go to restaurants or go to movies or that sort of thing. They were basically funneled in buying goods. They really couldn't buy services. So on the one side, their incomes were heavily, heavily supported by government programs. And on the other side, they were constrained in what they could buy. So as a result of these two forces, we saw savings absolutely explode over the past year. The savings rate in the spring quarter of last year got up to almost 30%. It's come down since then as people have been able to spend a little bit more money. But the savings rate, even as we speak, is still in double-digit territory. Before the pandemic began, the savings rate in Canada dropped to around 2 to 3%. So we've had this explosion in savings over the past year. We estimate that since the pandemic began, Canadian households have saved more than $220 billion more than they would have normally saved over the last year or so, above and beyond what they would have normally saved. We call this excess savings. It's if you consider how big $220 billion is, that's almost 10% of the total Canadian economy. That's an enormous amount of potential firepower that households could bring to bear when things are able to open up again. People are able to spend on things like services, like going to a restaurant, like going to a movie, like taking a small trip. And we do believe that consumers are absolutely aching to spend. They're not going to need any prompting from the government. We don't, government policy at all. We think that as things reopen, we are going to see a real rush of savings and spending, I should say. And to some extent, we are already seeing that in the US. Now, of course, the flip side of that, well, how did we get here? How did we get to such strong levels of personal income at this point? Well, the flip side of that is we had a terrible deterioration in government finances, especially at the federal level. The federal government really did bear the burden, bear most of the costs. Provincial finances were hurt, no doubt, but the bulk of the deterioration was at the federal level, and that's really why I've focused on Ottawa's budget balance. Of course, just a little bit more than a month ago, we finally got a budget from the federal government. The good news here is that the deficit actually wasn't quite as large as they were first estimating late last year, but it still came in an enormous $350 billion in the fiscal year that just ended in March. Now, this year's budget deficit is expected to be cut in less than half. That's still a big number, though, a very big number, $150 billion that they're looking at this year. The good news, looking further out, is they do think that as some of the special programs do roll off as the economy reopens, and if you read between the lines, they really do expect things to be pretty close to normal by September or October. They see a lot of their special programs ending in the month of September or so. And then they see the deficit really coming down much more aggressively in the next fiscal year to below $60 billion. That's still about double where we were before the pandemic began, but as a share of the economy, that's very manageable and a fraction of what the US is looking at in the next couple of years. Now, I often get asked, how are we going to pay for this? Well, essentially, the way we paid for it is by a big, hopefully one-time step up in Ottawa's debt to GDP. Before this all began, Ottawa's debt to GDP was about 30% of the economy. It's now a little bit above 50%. We think that, Ottawa thinks that it will now stabilize at around these levels, if not even drift down in the years ahead. But effectively, that's really been the big net change, is this dramatic increase in debt to GDP. I will point out that even at these levels, we're well below the bad old days back in the mid 1990s when we peaked at more than 70% of GDP. We saw that big improvement in the late 1990s, early 2000s. We've reversed half of that big improvement, but we're still in much better shape than we were in as I said, the bad old days of the mid 1990s. Now, the other big policy that's been helping to support financial markets, helping to support the economy. It's not just fiscal policy, it's also been monetary policy, interest rates, and the exchange rate. Monetary policy makers, central banks, what they really learned from the last crisis is that when you know you're in an emergency situation, as we certainly knew by March of last year, it doesn't make sense to hold back your ammunition. Basically, throw everything that you have at the problem immediately, and that's what central banks did. In the month of March 2020, which will certainly go down as one of the more important months for the global economy ever, we saw central banks right around the world cut their interest rates to the bone. For the first time ever, the Bank of Canada began to embark on so-called quantitative easing, buying government bonds to help keep long-term interest rates low as well, and also, frankly, to help support financial markets. And I would say it worked like a charm. That very rapid and aggressive monetary policy that we saw by both the Federal Reserve and the Bank of Canada played a big factor in turning financial markets around very, very early in the cycle and leading to this rally, or helping support this rally that we've seen for many financial markets over the past year. Excuse me just for 1 minute. Now, in terms of what we see for short-term interest rates, our view is that central banks will be very, very patient before they start raising interest rates. The market is a little bit more aggressive than we are, but we believe that the Bank of Canada and the Federal Reserve will wait until the job market has fully healed before they start raising interest rates. And as I said, we don't see that until we don't think the labor market will be fully healed until the second half of 2022. And so officially, we have the Bank of Canada and the Federal Reserve beginning to raise interest rates in early 2023, and then slowly but surely grinding rates higher through that year and the next year. If we're going to be wrong on this, it's that they'll go slightly earlier than what we've got forecast. But again, I think the main message here is just how patient we think central banks will be before they start to raise interest rates. Now, long-term interest rates, the bond market really burst out of the gates at the start of this year. You can see that U-shaped pattern in bond yields that were carved out during the early part of the pandemic and then coming back early in 2021. But in the last couple of months, those long-term bond yields have actually flattened out or even come down a little bit, as there have been some questions over just how forceful the global economy is going to come back in the year ahead. We still believe that these rates will slowly but surely climb over the next year and a half. These longer term yields are really what drive things like 5-year mortgage rates and the longer term borrowing costs of the provincial governments. We do see these yields slowly but surely creeping higher, but effectively what happened is the bond market, just like other markets, built in a very robust recovery right out of the gates at the start of this year, and now they're having a little bit of a second thought on just how robust this recovery will be. Ultimately, as I said, we do see these yields climbing somewhat over the next 18 months, but certainly not at the pace that we saw long-term yields climbing earlier this year. Now, one factor that can determine exactly how quickly the Bank of Canada and the Federal Reserve begin to raise rates and how high these long-term yields do get is what happens with inflation. And certainly inflation concerns have been front and center in recent weeks in financial markets. And I have to tell you, this is one of the most common concerns or questions I've been getting in recent weeks is, how worried should we be about inflation at this stage of the cycle? During the depths of the pandemic last year, we had inflation actually go negative very temporarily here in Canada, got close to negative in the US. A lot of the very meaty inflation numbers we're seeing right now do reflect a payback for those extreme conditions that we saw a year ago. When you think about how low gasoline prices got, how low oil prices got, a number of other prices as well got during the depths of the pandemic. Well, we're comparing ourselves now to those extremes a year ago. This is the so-called base effect. That accounts for a lot of the, the 3.5% reading we've seen in Canada, the plus 4% reading we've seen in the US. But there is a little bit more than just this so-called base effect going on. One thing I like to do is to compare prices now to where we were 2 years ago, and then average it out over those 2 years. And what we're seeing is a little bit of an uptick in underlying inflation in both Canada and the US. And there's a bit of a boomerang effect going on here. There's a bit of, prices were held down and now they're making up for lost time. In the US, there were some very specific items that are really driving up inflation. Used car prices, partly because people are rushing back to travel again, partly because auto production has been constrained by the computer chip shortage. So used car prices have seen a lot of strength in the U.S., not so much here in Canada. So there are some very special factors that are driving inflation. But I think from a bigger picture view, the point is that we probably are in for a spell of higher inflation than we've been used to for the last 5 to 10 years. Over the next couple of years, we see Canadian inflation averaging closer to 3% over the next 18 months or so, and that's higher than what we've become used to. And I have to tell you that, frankly, if you go back a year or so ago, that's a shocking development that we're talking about high side inflation risks rather than low side inflation risks. We've just been through the deepest downturn in the post-war era for the global economy, and we're coming out of it with high inflation risk rather than low inflation risk. To me, that's remarkable. And a lot of it is because, there's a variety of reasons. Some of it is because of the wave of stimulus that has supported incomes, let consumers keep spending aggressively, kept demand up. Part of it is because of some very specific bottlenecks that we're seeing in the supply chain, whether it's in computer chips, the shortages that we're seeing in places like lumber, the strength we're seeing in copper prices. There's a variety of reasons that are temporarily driving inflation. There's a huge debate over just how temporary these inflation pressures are. We come down on the side that we see it as a little bit more, long lasting than others do. But ultimately, we do think that inflation will come back down somewhat when we get out, 3-4 years down the road. So I would suggest that when you're doing your medium-term planning, when you're trying to estimate what average inflation will be over the next 5 years, I still think something close to 2% or a little bit above that is a reasonable expectation. But I have to say that the high side risks are a little bit more meaningful than they were, if we went back to pre-pandemic times. And there is a little bit more risk that we could be surprised by more of a lasting episode of inflation on this front, simply because of all the many supply shortages that we're dealing with, and the fact that central banks are willing and to tolerate a bit higher inflation for a period of time here. They effectively have told us they want to run the economy hot to get those jobs back, and if it means a bit more inflation for a few years, then so be it. And I have to take central bankers' word, their word at it, that we will see inflation above 2% for a spell here. And I have to say, I often get pushback. People can't believe that inflation's, quote, only 3% right now. And so I like to go down the items one by one, and what's leading inflation and what's dragging on inflation. This is the change in prices over the last 12 months in a variety of categories. If you look at the right-hand side, you can see what's really risen from the pandemic lows of last April. Gasoline prices by far and away have been the big leader. Natural gas is right next. New homes. I'll get into that in a minute, but that's definitely been a driver. But there's quite a variety of different items down the right-hand side, and a lot of it, again, are the things that people could buy, things like appliances and furniture and new autos and books and recreational vehicles. A lot of things that people could buy during the pandemic have seen some real strength. Meanwhile, on the left-hand side, kind of an odd assortment of things that have actually dropped in price over the last 12 months. Frankly, I personally find auto insurance is a little bit surprising, I guess, just simply because people are driving less on that front. Some completely make sense, like hotel and motel rates. No surprise there that they've come down a lot. But then there's a few very specific and important items, things like telephone services, coffee. That's important to a lot of people. Sports equipment. I find that one a bit surprising that it's actually come down in price. But the main point is that, while we often focus on the things on the right-hand side that have risen in price, there's also at the same time a lot of things that have actually come down in price that do help hold the overall inflation rate close to 3% at this point. I do have to spend, and I won't talk for too much longer here. I want to leave some time for Q&A, but I do have to spend a little bit of time talking about the housing market. This is way beyond a V-shaped recovery, and frankly, I will openly tell you this is one area where, not to put too fine a point on it, but economic forecasters blew it. A year ago, our National Housing Agency was talking about a decline in home prices of 9 to 18%. Quite frankly, they got the sign wrong. This is an area where, after about 1 to 2 months of freezing up the housing market, not only did it thaw, but it came back hotter than ever before. We've had more than a complete reversal. Almost right across the country, almost every major housing market in the country is showing some varying degrees of health. That chart on the right there, I call that my Canadian Football League chart, and I've added St. John's in too. It's basically the 9 cities in the CFL plus St. John's. It's the change in existing home prices over the last 12 months. The only thing that's really changed from pre-pandemic levels on this chart is everybody has taken a big step to the right. So in other words, cities that were sort of sluggish or even weak before the pandemic, like most of the prairie cities, I should say, and St. John's, are now in positive territory and seeing decent gains. And the cities that were hot before the pandemic, like Hamilton, Ottawa, Montreal, are now even hotter. And this is just the CFL. I haven't put the minor leagues in there. Somewhat smaller cities like Quebec, Halifax, Windsor, London, Ontario. Those cities are even stronger than some of the top cities on here. There are a number of smaller cities, especially in Ontario, that are seeing gains of 40 to 50% in the past year. I often get asked, how long can this last? Is this sustainable? It's not sustainable at this pace. But frankly, until we see interest rates starting to move up in a more meaningful fashion, there really isn't that much out there that is going to cool the housing market. I think as things hopefully begin to reopen again, we'll see a little less focus on the real estate market in general. We've seen some very minor policy steps taken in the last couple months to throw a little bit of cold water onto the housing market, but we're dealing with a towering inferno in some cities, and it's going to take a lot more than what policymakers have done up to this point to really cool things down. And so overall, we're of the view that the market will remain very constructive unless and until we begin to see interest rates rise in a more meaningful fashion. And until that point, we would still, expect home prices to rise further. Sales did have come off a little bit in the last couple of months. They're still very strong, though. We're still seeing some of this. For instance, when the May numbers come out for the country as a whole next week, it's going to show the strongest May ever. It will be below the extremely fiery demand we saw back in March, but the sales are still at a level that are pushing prices up, and the market is as tight as I have ever seen it. Frankly, when we look at it right across the country. Second last topic I'm going to touch on is the Canadian dollar. Much like other financial markets, the Canadian dollar got hit hard during the downturn last March and April, but it came right back, and we're now well above pre-pandemic levels. We're floating with 83 cents in recent days. Our underlying view is that we are still somewhat constructive on the Canadian dollar, at least over the next 12 months or so. The big drivers for the Canadian dollar are the US dollar itself. And that was the main reason why the Canadian dollar came back last year and did so well in the second half of last year. A lot of the strength in the Canadian dollar was just the flip side of weakness in the US dollar. That hasn't really been the case in 2021, though. The US dollar has actually stabilized. It's found a footing against most other currencies, but the Canadian dollar has kept right on rise. The Canadian dollar has actually been one of the strongest currencies in the world in 2021. This year, it's been much more a story of commodity prices and the comeback in oil prices specifically that has really led the Canadian dollars. There's also this view out there that the Bank of Canada is going to raise interest rates way ahead of the Fed. We're not believers in that. We think there's going to be a bit of a reassessment on that front. But the commodity price engine is still working away. It's still supporting the Canadian dollar. And fundamentally, we think that anytime you've got a strong global recovery, that is a fundamentally positive backdrop for the Canadian dollar. So when we balance all these factors out, a stable US dollar, some view that the Bank of Canada might go a little bit earlier in the Fed, and still firm commodity prices, we think when we sort all those out, we're mildly positive on the Canadian dollar over the next 12 months. We've got the Canadian dollar strengthening a little bit further, peaking at about 85 cents when we get out about 12 months or so. But then when you look beyond the next 12 to 18 months, we're more cautious on the Canadian dollar. We see the longer term fair value for the Canadian dollar more in the 75 to 80 cent range. So we would be a bit more cautious on the long term. The last thing I'll touch on, I'll just wrap up here, is ultimately what shape was this recovery? If we summarize all this, early in the pandemic, the big debate was, are we going to get a V-shaped recovery? Most people said not a chance. Other people were talking about U-shape or W-shape, with a second big dip, or L-shape. We were never going to come out of this. But I think at the end, it was pretty close to a V, except in the sectors that were directly affected by the pandemic. And that's why people talk about the so-called K-shaped. At the top of the K, we had most of the economy with a nice comeback, a very sharp V-shaped recovery. But then there were the sectors that, were directly affected by the pandemic that will not be able to fully recover until we've really put this in the rearview mirror. They're still struggling. It's essentially the entertainment sector, the travel sector, the transportation sector, which of course is mostly air travel on that front, and then other services, things like gyms and spas and that sort of thing. when you combine all those components together, they make up a little bit more than 5% of the economy. Until we have completely put the pandemic behind us, this very battered 5% of the economy is not going to be able to fully recover. And until it does fully recover, we can't say that the overall economy has fully recovered. And we think that that's a story for late this year or into 2022. That's it for the formal part of the presentation. I'll now stop sharing my screen and invite AnnMarie back in to join us. Thank you very much.
Thank you, Doug. That was very helpful and insightful. I have a few questions before we let you go. We have a few minutes left of your time, I believe. Some of them you have touched on, certainly, and I guess the most common thing that we were looking to ask you about was was inflation, as you mentioned. And there are certainly a lot of questions and concerns, as you mentioned. I think what I heard from you is that we probably don't need to be as worried as what we anticipated or what some are probably fearful of. Is there anything you can elaborate on as we think about that in terms of small business owners and people who are making decisions?
Yeah, and I think it's worth spending a couple minutes more on inflation, because realistically, it is probably the biggest debate going on right now in financial markets. And I have to say, it is the most common question I get from business owners and corporate clients as well. And I guess the way I would frame it is, so when there's a lot of concern that we're going back to the 1970s, and lo and behold, we even had gas lineups. For those of you who may have lived through the 1970s, it was like a bad flashback. It was that 70s show again. I do not believe we're going back to double-digit inflation. We could see a month or two of inflation numbers that we haven't seen in quite a long time, and we do get the report for May consumer prices out just this week in the U.S. The headline inflation number in the U.S. could get close to 5%. There's actually only been a month or two in the last 30 years that we've talked about 5% inflation in the U.S. It was back in 2008 when oil prices got up to $50 per barrel. But those kind of 5% numbers are not going to last long. Again, this is just comparing to that extreme situation we were in last year. The headline inflation number will come off in the second half of the year. So it's not going to be quite as as scary as the numbers will look like in for about a month or two here. But having said that, we're definitely in a somewhat different place than we were before the pandemic. I mean, before the pandemic, people were worried about inflation being too low. How we never seem to be able to get 2% inflation, no matter what we did. Well, policymakers have decided that they're going to use this opportunity, and this is true in Canada, it's true in the US, that they're going to run things hot. They're going to let the economy really bounce back and bounce back vigorously, and they're going to use both government spending and low rates to really drive a forceful recovery. So the good news there is, I am pretty confident that as things are able to healthily reopen, we're going to get very, very strong activity in the next year. The downside is we are going to be risking a bit more inflation than we've become used to. And so our average forecast inflation in Canada is about 3% for both this year and next year. Again, before this began, we'd be lucky to ever see a year or 2%. So for a small business owner, I think you just have to realize that there is some upside risk here. Some of these cost increases we're seeing in a variety of goods could be with us for a while. We could also see a little bit of wage pressure. It's going to take some coaxing to get workers to come back. We're certainly seeing that in the U.S. And so, on balance, I do think there's a bit more upside than what we've become used to on the inflation story.
So linked to that, since the start of 2021, and you did reference this, that we've seen a rise in bond yields. And so our members, and certainly small business owners, entrepreneurs, they use debt, of course, as a means to finance business expansion, investment, and overall everyday operations. What would be your advice to businesses with respect to how to manage their interest rate risk?
Yeah, a very important question. Unfortunately, I was kind of losing my voice a bit when I was talking about bond yields earlier, and I may have stumbled through that part just a little bit. I think it's important to go over that just again briefly. Essentially, in the first few months of this year, bond yields came charging back as it became more clear that a very strong U.S. recovery was on deck. We saw bond yields in both Canada and the U.S. and many areas of the world come back quite aggressively early this year. But since about March, they've flattened out and have actually come down a bit. And for all intents and purposes, they're roughly back to where they were before the pandemic, even with these concerns over somewhat higher inflation. Bond yields are really no higher than they were before the pandemic began. We don't see bond yields really ratcheting higher from current levels. And just to clarify, a 30-year government bond yield, government of Canada bond yield, as we speak, is about 2% right now. That's remarkably low. A 10-year government bond yield is around 1.5%, and that's true in the U.S. as well. That's actually below inflation, or what we're expecting for inflation over the next 5 to 10 years. So it's still a very low level of borrowing costs when we look out, 10 years down the line. And of course, small businesses, corporations have to pay more than what governments do. But overall, these yields are still remarkably low. And part of that is just because of the very aggressive bond buying we're seeing by central banks, which has helped tamping down these long-term interest rates, help keeping them very manageable. I don't see that going away anytime soon. We see these yields climbing a bit, but central bankers certainly do not want to see interest rates ratcheting higher quickly. As I said, they want the economy to run hot. They want spending activity to stay strong, and part of that is by keeping borrowing costs really under wraps, in check. So while we see rates creeping higher a bit, I'm not especially concerned about a big ratcheting higher in interest rates. Even when we look out 2 to 3 years. What's the one thing that could really knock that view off track? Well, it goes back to the inflation story again. I mean, if we do go through something like the 70s again, where we, not only are we talking about 5% inflation, we're talking about 8, 9, 10% inflation for a while. Yeah, that's the kind of if we see that kind of thing developing, yes, then then all bets are off on the interest rate front. I can't completely dismiss that risk, but I would give it maybe a 5 to 10% risk of us getting into a situation like the 70s.
So our members can feel relatively confident about making the investment or
I think so. And certainly the short-term interest rates, the Bank of Canada and the Federal Reserve are not going to be aggressive in raising short-term interest rates.
Okay. Very helpful, I'm sure, for many on the line with us today. Doug, when are we going to be back to normal, or are we going back to what we had before, or is there going to be a new normal?
And I think everybody's got their own opinion on what the new normal will look like, and I think it really does depend on particular sectors and industries. I think some will come back very differently than they went into it. I'm always almost since day one of this, I've been cautious about saying, well, this is going to change forever and this is going to completely change, because sometimes it's surprising how little things actually do change on the other side of it. I think there are a couple areas that we can pretty confidently say will be different. I think business travel is going to be a shadow of itself on the other side. And I don't mean things like conferences. I actually do think they will come back. I think client meetings will eventually come back in much the same way. But I think internally, businesses will not be traveling as much for internal meetings and that sort of thing. And even some small client meetings, this kind of format, people become a lot more used to it. No one's got an excuse anymore. Instead of me going to Regina in the middle of February, hey, I might be able to talk the client into doing a Zoom meeting instead, or a Teams meeting. So I do think business travel will be less than what we saw before the pandemic. I think personal travel is going to come back. If anything, there's going to be revenge travel on the other side of this. I think people are going to want to make up for lost time on that front when it's safe to do so. The other area that I think is still very much an open question, and I'm sure this goes for St. John's as well, is how does commercial real estate really come back from this? Whether you're talking on the retail side or the office side, I think everybody's dealing with a slightly different issue in terms of how we're going to work from home or not in the future. But I think at the very least, most businesses will be looking at ways to somewhat trim their footprint and at least develop some kind of a hybrid model of working from home. So I do think the demand for office space will dim a little bit, and that's going to hurt the weaker portions of the market. The retail sector too, I do think that's one area where we could see some lasting change. Canadians have become much more adept at online shopping. We were, let's face it, we were a slow adapter to that in Canada. We've jumped in with both hands. during this. It's essentially just accelerated a pace that was probably in place in any event. But I do think, our real estate folks do believe that, especially smaller retail centers, outdoor plazas, for instance, will tend to struggle a little bit more in this environment, and this is looking out 2 to 3 years. So I think those are areas that will change. Going back to your very first question, when are we going to be back to quote normal? Again, I think everybody's got their own view on this. I think completely back to normal, I think it could be about a year from now. I think we'll go through a couple transition phases here. First, the 6 months as things slowly begin to open, and then 6 months as things really do completely get back to normal. When you think about things like travel and tourism and the job market.
Do you see that being directly linked to kind of double vaccine distribution?
Definitely on the travel side. I think before most folks and policymakers, frankly, are really comfortable about getting back things back to normal. I think they'd like to see a much higher number in terms of second vaccines.
Doug, when do you think we'll see the US-Canada border open?
And there's been a lot more. I have to say my core assumption up until very recently is it could be as late as Labor Day, but there seems to have been more movement in recent days. And not to be trite about it, but frankly, the exemption that was offered for the NHL came as a bit of a surprise to me. I thought, well, it's now the Montreal Canadiens. I thought they were going to have to play in a U.S. city, but I was a little bit surprised that the government did allow that. So I think maybe the logjam might be opening up a bit earlier than I thought. Of course, they've got a big decision to make because June 21st marks the next key date here. I suspect they push it back another month, but it could open up at some point in the summer. It looks like it's going to be earlier than I had anticipated on that front. Fingers crossed.
Yeah, I think there are lots of anxious people on both sides of that border. I have two quick questions. One of them is with respect to oil and gas. And what are your views in terms, we're certainly a province that does depend heavily on oil and gas and the price of oil. What are your views on where oil prices are headed over the next even 10 years or so? And how do you believe that would impact the development in our province?
So, by the way, just as a bit of backdrop in terms of our forecast, we're actually relatively cautious on our oil price assumption. We based our economic forecast on $60 oil for WTI. So if we're surprised to the high side of that, the Canadian economy and Newfoundland in particular will do better than what we had projected. There. And certainly I do see the risk to the upside of our forecast. Obviously, when we're looking at a price of almost $70 as we speak, clearly our assumption is on the cautious side. I have to say, if we look out further, I do believe this is one area where things have developed in a different way than what I was expecting. My underlying view has been for a long time that if you look at the inflation adjusted oil price since all the way back in the early 70s when OPEC really began to assert a lot of power, in today's dollars, the average oil price since then has been about $60 US. And that's part of the reason why we've got a $60 oil price assumption. My underlying view is that if anything, the risks of that were to the downside over the next 5 to 10 years, just because of the war on carbon that we're seeing everywhere. But the thing that's evolved in my thinking on that front is initially I thought the war was going to be mostly on the demand side. What we've seen is the attack has actually mostly been on the supply side. In other words, activists and whatnot and investors are actually going after the oil companies in a big way, actually trying to dampen investment in the sector. And so it actually looks like, as a result of the war on carbon and being mostly on the supply side, the risk of price are actually to the high side of its long-term average, not the low side, unless and until demand really does begin to get squeezed as well. So I think if anything, the risks are actually even when we look at 5 to 10 years, are actually higher than $60, not lower.
Interesting and welcomed news. My last question, I guess, for you, Doug, would be, given the economy and the financial situation of the province that we are all located in, is there any advice or final parting words that you would give to the business community in Newfoundland and Labrador?
So we've obviously, as the minister indicated, we've been through a very traumatic event, both for the province, for the nation, for the global economy. I guess the two things I would point to is, first of all, policy is just incredibly generous at whether you look at fiscal or monetary. Policymakers want to generate a boom here to basically make up for lost ground, and I think businesses should take that on board when they're doing their planning. That policy is basically geared for really generating a strong recovery as things do open. And I think businesses have to be prepared for that for the short term. The second message is the flip side of that is they're also willing to tolerate some inflation. We spend a lot of time talking about inflation, but I think we have to recognize that both costs and prices could surprise on the high side, at least for a few years here at this point.
Well, thank you for that. I certainly appreciate you taking your time today and spending the afternoon with us today and answering our questions. We appreciate your expertise and insight. And thank you to everyone who joined us today. We're looking forward to welcoming you all back tomorrow at 10 a.m. for our final day of the conference. We'll be speaking with industry leaders across a variety of sectors here in Newfoundland and Labrador. We'll be hearing what they've learned over the last year and a half, and what lays ahead of them into the future, and why we should feel optimistic and excited about what's happening. So see you all tomorrow. And Doug, thank you again.
Thank you, AnnMarie. Bye.
Have a lovely day.
You too.
Bye-bye.